Do you ever wonder how some people seem to have perfect credit scores? What's their secret? Today, we're diving into the top secrets that can boost your credit score faster than ever. From simple habits to powerful strategies, you'll learn how to transform your credit score and open up new financial opportunities. So without further ado, let's dive in. Number 1. Pay your bills on time. One of the simplest yet most impactful things you can do for your credit score is paying your bills on time. Every late payment gets reported to the credit bureaus and negatively affects your score. Make sure to stay on top of your bills, and if you're behind, catch up as quickly as possible. Consistency in on-time payments is key to improving your credit score. Number 2. Pay off debt. Paying off debt is crucial for a healthy credit score. The way you manage your credit utilization, the percentage of your available credit that you're using, plays a major role in determining your score. Ideally, you should keep your credit utilization below 30%. If you're using more than this, it can negatively impact your credit score. To lower your credit utilization, start by paying off high-interest credit cards first. Focus on reducing balances on cards with the highest interest rates to save money in the long run. If you have multiple cards, consider paying more than the minimum payment on each to accelerate debt reduction. Creating a budget can help you allocate more money towards paying down debt. Set clear goals and track your progress regularly. Additionally, avoid accumulating new debt while paying off existing balances. This strategy not only helps improve your credit score, but also reduces financial stress and increases your overall financial stability. Number 3. Increase your credit limits. Reducing your credit utilization isn't only about paying off debt. You can also improve it by increasing your credit limits. Many credit card companies offer an online form to request a limit increase, but calling customer service can be more effective. Speaking with a representative often results in a higher success rate for increasing your credit limits. Number 4. Use your credit cards responsibly. Using your credit cards responsibly is essential for maintaining a strong credit score. Start by paying off your credit card balance in full each month. Avoid just making the minimum payment, as this can lead to interest charges and increase your overall debt. Paying in full helps you avoid interest and keeps your credit utilization ratio low. Keeping your credit card balance below 30% of your total credit limit is also important. High credit utilization can signal financial trouble to lenders and negatively affect your score. To stay within this limit, monitor your spending and make payments before your statement closes if needed. It's also wise to avoid maxing out your cards, even if you plan to pay off the balance quickly. Regular, responsible use of your credit cards, like making small, manageable purchases and paying them off promptly, demonstrates to lenders that you can handle credit responsibly. Number 5. Keep your old credit cards open. Keeping your old credit cards open can positively impact your credit score. One of the factors that influence your score is the average age of your credit accounts. The longer you've had credit accounts, the better it looks to lenders. Closing old cards reduces this average age, which can negatively affect your score. Moreover, keeping old credit cards open helps improve your credit utilization ratio. Since your credit limit is a factor in calculating this ratio, having more available credit reduces the percentage of your total credit limit that you're using, even if you're not actively using those cards. However, be mindful of annual fees on old cards. If a card charges a fee and you're not using it, you might consider whether it's worth keeping. In most cases, though, maintaining old accounts without fees is beneficial for your credit profile. Number 6. Become an authorized user. Becoming an authorized user on someone else's credit card can be a powerful way to boost your credit score. When you're added as an authorized user, the primary cardholder's payment history and credit utilization will appear on your credit report. This can positively impact your credit score if the account is managed well. It's crucial to ensure that the primary cardholder has a good credit history and maintains low credit utilization. Ideally, The card should have a long, positive history with timely payments. If the primary cardholder has a high credit limit and low balance, it will further benefit your credit score by improving your credit utilization ratio. This strategy can be especially useful for individuals with limited credit history. By being added as an authorized user, you gain access to the cardholder's established credit history without the need to open a new account, which can be advantageous for improving your credit score more quickly. Number 7. Avoid applying for new credit. Applying for new credit results in a hard inquiry on your credit report, which can decrease your score slightly and stays on your report for 2 years. It also reduces your average credit age, potentially dropping your score further. To avoid these impacts, try not to apply for new credit unless absolutely necessary. Number 8. Dispute errors on your credit report. Disputing errors on your credit report is a vital step in maintaining a healthy credit score. Studies show that about 20% of people have inaccuracies on their credit reports, which can include incorrect account details, mistaken late payments, or even debts that don't belong to you. These errors can significantly harm your credit score if left unaddressed. To start, request a copy of your credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, at least once a year. Review each report carefully for any discrepancies. If you find an error, file a dispute with the credit bureau that issued the report. You can usually do this online, by mail, or by phone. Provide any supporting documentation that proves the error. The credit bureau is required to investigate your claim within 30 days. If the investigation finds that the error is valid, it will be corrected, which can improve your credit score. Regularly checking your credit report and addressing inaccuracies promptly helps ensure your credit profile accurately reflects your financial behavior. Number 9. Diversify your credit mix. Having a diverse mix of credit accounts can positively impact your credit score. This means having a combination of credit cards, retail accounts, installment loans, and mortgage loans. Diversifying your credit shows lenders you can manage different types of credit responsibly. If you only have one type of credit, consider adding another to your profile. Number 10. Set up payment reminders. Setting up payment reminders is a simple yet effective way to ensure you never miss a payment, which is crucial for maintaining a good credit score. Late payments can have a negative impact on your credit report and score, so staying organized with payment deadlines is essential. You can set up payment reminders through various methods. Many banks and credit card companies offer free reminder services via email or text message. You can also use mobile apps designed for budgeting and financial management, which often include customizable payment reminders. Another option is to set calendar alerts on your smartphone or computer. Additionally, consider setting up automatic payments for your bills. This ensures that your payments are made on time each month, reducing the risk of missed payments. Just make sure to keep track of your account balances to avoid overdrafts or insufficient funds. By using these tools, you can stay on top of your payments and keep your credit in good standing. Thanks for sticking with us through these credit score secrets. By implementing these tips, you'll be well on your way to boosting your credit score faster than ever. Remember, a higher credit score can open doors to better interest rates and financial opportunities. If you found this video helpful, then don't forget to like, share, and subscribe to our channel for more valuable insights and advice. Thanks for watching, and see you in the next video.